Welcome to the Deep Dive. We sift through the noise, the reports, the calls, and pull out what really matters so you get the insights without the hours of research.
Exactly, giving you that shortcut to being genuinely informed.
Today, we are getting into OPRA Limited's Q2 2025 earnings, and it's an interesting one.
Definitely. You see this really strong top-line growth. They keep beating expectations there, but then the market reaction, a bit more reserved, shall we say.
Yeah, exactly, a paradox. So, our mission today is pretty clear. Let's unpack these numbers, look at OPRA's strategy, especially around AI and FinTech, and try to figure out why investors might be pumping the brakes a little.
Sounds like a plan. Where should we start? The top-line numbers.
Let's do it. So, headline revenue, $143.0 million. That comfortably beat the consensus estimates.
Yeah, and not just beat, but showed solid growth. That's a 30% jump compared to Q2 last year. Pretty robust.
So what's driving that 30%? Where's the power coming from?
Okay, so the breakdown is, well, quite revealing. Advertising revenue, it just surged, up 44% year over year.
44%. Wow.
Yeah, hitting $92.9 million. And get this, that's now like 65% of their total revenue.
Okay, so advertising is the big engine.
It really is. And inside that, e-commerce advertising was apparently phenomenal. Grew over 100% year over year.
Even with all that talk about U.S. tariffs potentially creating headwinds.
Exactly. They managed that growth despite that uncertainty, which is impressive. But it wasn't just advertising.
Okay, what else?
Search revenue, it bounced back nicely, returned to double-digit growth, up 11% year over year.
Right, I saw that. $49.6 million.
Making up the other 35% of revenue. So you've got both cylinders firing, really.
Okay, strong revenue, ads firing, search back in the game. But, you know, revenue is one thing. How did they do on profitability? And what about the users themselves?
Good question. So adjusted EBITDA, which is a good measure of core operational profit, right? That came in at $32.1 million.
Which is a healthy margin.
Yeah, very healthy. A 22% margin. And that figure itself was up 21% year over year. Shows good operational control.
Okay, so operationally strong. But I think I saw something about EPS.
Yes. Here's where it gets a bit nuanced. The non-GAAP diluted EPS earnings per share adjusted was $0.26.
And the expectation was?
The street was looking for $0.27. So, a slight miss. Just a penny shy.
Okay. And the op EPS?
That was $0.17. So yeah, strong operations, healthy EBITDA, but the adjusted EPS just slightly missed the mark.
Got it. That distinction matters. What about users? Are they just getting more users or making more from them?
That's the key, I think. Their monthly active users, MAUs, were pretty stable around 289 million. But the real story is ARPU, average revenue per user.
Okay, what happened there?
It jumped big time, 35% year over year, hitting $1.97.
35% ARPU growth. That's huge. That tells you they're really succeeding in monetizing the users they have, right?
Absolutely. It's a clear sign their strategy of focusing on higher value users, better targeting, maybe premium features is really paying off. And don't forget OPRA GX, the gaming browser.
Right. How's GX doing?
Still growing steadily. MAUs there hit 33 million, up 11% year over year. So that niche focus is working too.
And all this better monetization, I assume that translates into cash?
Directly. They showed really strong cash flow from operations CFOA, $33.1 million.
Which is how much relative to EBITDA?
An excellent 103% of their adjusted EBITDA. And free cash flow from operations FCF was also strong at $29.1 million, about 91% of adjusted EBITDA.
So they're not just reporting profits, they're actually generating significant cash.
Exactly. The money's hitting the bank account, which is always good to see.
Okay, so let's circle back. Strong revenue beat, solid EBITDA, fantastic ARPU growth, great cash flow, but a tiny EPS miss.
Yeah.
And the market reaction.
Yeah, that's the puzzle, isn't it?
Yeah.
The stock popped initially, maybe 5% in pre-market trading. People see the headlines, revenue beat, looks good.
Yeah.
But by the end of the day, the stock actually closed down over 4%, and the volume was way up, like 4 times the average.
So initial excitement faded fast. Investors dug deeper and maybe didn't like everything they saw.
That's what it suggests, yeah. The market looks beyond the headlines. Profitability details, costs, future outlook. Maybe something there gave them pause after the initial reaction.
Okay, perfect setup for our deep dive then. Let's really get into the weeds. That advertising strength you mentioned, AI playing a role.
Yes, management talked about their AI-powered intent-based advertising, especially in e-commerce. It sounds like they're using AI not just for targeting, but maybe to understand user intent better, leading to more effective ads.
Which could drive higher conversions for advertisers, making Opera's ad space more valuable.
Precisely. And the fact it performed well, even with those tariff concerns in the US, that points to some real underlying tech strength.
And the search rebound, equally important, you think?
Absolutely. It shows diversification. They aren't just a one-trick pony with advertising. Having search back in double-digit growth provides a more balanced revenue profile.
Let's go back to that ARPU number, 35% growth. How are they pulling that off? Is it just better ads?
It's likely a mix of things, better ad targeting, sure, but also focusing efforts on users or regions where monetization potential is higher, maybe introducing new features, perhaps even premium ones that encourage spending or engagement. It signifies a really deliberate, effective strategy.
Not just chasing user numbers, but chasing user value.
Exactly right. Quality over just quantity.
And that cash generation we mentioned clearly supports them. They had, what, $133.8 million in cash?
Yep, a very healthy balance. Gives them flexibility. And they're not just hoarding it either, they're returning cash to shareholders.
Like the dividend.
Yeah, they announced another $0.40 semi-annual dividend. If you add it up, since the start of 2023, they've paid out $2.80 per share.
And they did buybacks before that too, didn't they?
They did a significant 30% stock buyback program pre-2023. So it paints a picture of a company that's growing, but also focused on shareholder returns. That's a combination many investors like.
Okay, let's shift to the future. The guidance they gave was pretty bullish, wasn't it?
Very optimistic, yeah. For Q3, they're guiding revenue between $146 and $149 million. The midpoint there is above what analysts were expecting.
And profitability.
Adjusted EBITDA guidance for Q3 is $34 to $36 million. That implies around a 24% margin, so continued profit strength.
And for the full year, they raised guidance.
They did. Full year 2025 revenue guidance is now $585 to $597 million. Again, midpoint above consensus. And importantly, this implies revenue growth is actually accelerating for the full year, hitting 23% at the midpoint, up from 20% last year and 21% the year before.
Accelerating growth, that's usually a good sign. EBITDA guidance also up.
Lifted as well. $136 to $140 million for the full year, targeting roughly a 23% margin overall.
Did they mention any potential challenges baked into that raised guidance, like currency issues?
They did acknowledge currency headwinds, specifically a weaker US dollar affecting some costs like compensation.
Oh, okay.
But the fact they raised guidance despite those headwinds, that signals pretty strong confidence from management in the core business momentum. They clearly think their growth initiatives can power through.
So what are these big initiatives? What's driving that confidence beyond the core ad and search business?
Okay, this is where the story gets potentially transformative. They're talking about the browser evolving, their vision, the browser as the, quote, operating system for AI services.
Operating system for AI. Okay, unpack that. What does it mean in practice?
It leads into their big new product, OPRA Neon. They're calling it an agentic browser, slated for public rollout later this year.
Agentic browser. Sounds very sci-fi. What does an agentic browser do?
Think of AI agents like little assistants built natively into the browser, not just extensions, but deeply integrated AI that can understand context, learn your habits, maybe even execute tasks for you across different websites or services, all within the browser environment.
So faster, more integrated AI help.
That's the idea. Faster execution, richer context because the AI lives in the browser, and potentially much broader functions. They think Neon could seriously lift ARPU through new kinds of commerce integrations or proactive assistant features. It's a big bet on the browser becoming central to the AI experience.
Very ambitious. But they also have that other non-browser bet, right? MiniPay.
Exactly. MiniPay is their FinTech venture, and it's exploding.
Exploding how? What are the numbers?
Over 9 million activated wallets already. And they've processed over 250 million transactions.
Wow. And it's based on stablecoins.
Yeah, it's a stablecoin wallet focused on financial inclusion, letting users in, I think it's 53 countries now, send and receive money super easily just using a phone number.
What's the strategic angle there? How does it make money differently?
Well, it opens up a whole new revenue stream outside of ads. They can leverage the stablecoin ecosystem itself, transaction fees, maybe other financial services built on top. It's potentially very profitable, and it makes Opera kind of a stealth fintech player, not what you expect from a browser company.
Definitely not. Okay, and quickly, Opera GX, the gaming browser, anything new there?
Still chugging along nicely. 33 million MAUs now. They mentioned recent updates for better tab management, which gamers apparently love, and they're expanding it geographically, soft launch in South Korea, plans for Japan, tying up with big gaming names like League of Legends.
So focusing on that high engagement niche makes sense.
Keeps that segment growing and monetizing well.
Okay, with all this innovation, growth, new ventures, let's talk costs. Because that seemed to be where the market maybe hung up a bit.
Right. Management said overall operating expenses should grow slower than revenue going forward, which means margins should expand in the second half of the year. That's the good news.
But there was a specific cost item that jumped out.
Yes. Share-based compensation, or SBC. It was up. Wait for it. 354% year over year.
354%. Okay, what exactly is SBC again?
It's basically paying employees with equity stock options, restricted stock units. It's a non-cash expense, so it doesn't drain their bank account directly.
But it hits the income statement.
It does. It reduces the reported earnings per share. Management tried to downplay it a bit, saying the number of actual equity instrument vesting is stable, but the accounting for it can be volatile based on share price and timing.
Still, a number that big, even if non-cash, is bound to raise eyebrows and impact that EPS calculation.
Absolutely. It likely played a big role in that slight EPS miss and definitely contributed to the market's caution during the day.
Okay, let's pull this all together. What's the takeaway for you, our listener, watching this unfold?
Well, first off, OPRA's execution on the top line is undeniable. They consistently beat revenue estimates, proving their core ad and search monetization strategy is working really well.
And these big strategic bets, OPRA Neon for AI, MiniPay for FinTech, are these just shiny objects or real game changers?
I think they represent genuine, significant long-term potential. They're not just tweaking the browser. They're aiming to build entirely new ways to generate revenue and user value, moving way beyond traditional browser models. MiniPay especially, its growth is remarkable and puts them right into the lucrative stablecoin space. That's often overlooked.
Does he have this picture? Management is really bullish, raising guidance, launching ambitious projects.
Right. Huge confidence there.
But the market reacts cautiously, focusing perhaps on that SBC jump, the slight EPS miss, maybe currency effects. How do you square that circle?
It just shows that investors, especially in this environment, are very discerning. Top-line growth is great, but they're digging into the details of profitability, cost structure, and the quality of earnings. That divergence between management confidence and market caution is pretty common, actually. The question is which perspective wins out over time.
And what about their place in the world? An independent browser fighting giants like Google and Apple. Is that sustainable?
They argue it is. Nearly 300 million users isn't small potatoes. They have 30 years of experience innovating in this space. Their bet is that AI actually levels the playing field somewhat, shifting value back to the browser experience itself, away from just the underlying OS or search engine.
And they partner with AI companies rather than trying to build everything themselves.
Exactly. They see the browser becoming the key interface for accessing various AI services, and they aim to be the best platform for that, leveraging their independence and user base. It's a bold strategy.
All right. It's that time, our not financial advice segment. We've chewed on the earnings, the strategy.
Yeah.
What's an outrageous but plausible trade idea based on all this?
Okay, thinking about this convergence opera pushing hard into AI with Neon and FinTech with MiniPay, here's a thought. Let's call it the convergent innovation play.
Convergent innovation, I like it. Lay it on us.
The conceptual trade idea is this. Go long OPRA, OPRA. Maybe think about participating in potential upside, like a 20-25% move from current levels, looking out 12 to 18 months.
Okay. A bullish bet on OPRA realizing its potential. What's the other side of the trade?
At the same time, you'd conceptually short, or bet against, a highly valued AI SaaS company, a pure-play software firm selling AI services that doesn't have its own browser or a significant fintech angle.
Interesting. So long OPRA, short a generic AI SaaS company. What's the underlying thesis? Why that specific pairing?
The thesis is that the market isn't fully appreciating OPRA's unique two-pronged attack. If Neon actually delivers on making the browser a central AI hub, that could unlock massive ARPU growth not currently priced in. Add MiniPay's explosive fintech growth in the profitable stablecoin world, another angle the market might be sleeping on. So the long OPRA part bets on the market waking up to this unique combination.
And the short side, why bet against the pure play AI SaaS?
The thinking there is, as the AI market gets more crowded, pure software players without their own distribution channel, like a browser, or deep user integration, like payments, might face tougher competition, maybe margin pressure, or slower growth than currently expected. Their high valuations might not hold up if AI becomes more commoditized or integrated elsewhere. So it's a macro bet on how AI gets delivered and a micro bet on Opera's specific strategy.
A bet on integrated platforms versus standalone services, essentially, and a bet on Opera's execution. Very nuanced.
Exactly. It's playing the convergence.
Okay, let's quickly recap. Opera's Q2, revenue beat, guidance raised, strong momentum in ads, and search is back.
Yep, top line looks great. And huge strategic pushes with the AI-powered Opera Neon coming soon and the already booming MiniPay stablecoin wallet. Lots of future potential there.
But a slight EPS miss and that big jump in share-based compensation clearly made the market a bit nervous on the day, despite the bullish outlook from management.
Right. The underlying business looks strong and innovative, really pushing boundaries at the intersection of AI, FinTech, and the web. But those bottom line details and costs matter to investors right now.
So the big question for you to think about is, will Opera's strategic bets pay off enough for the market to fully buy into the growth story? Or will concerns about costs and near-term profitability keep a lid on things? Remember, this has just been a discussion for informational purposes.
Definitely not financial advice. Always do your own homework before making any investment decisions. We'd love to hear your thoughts, though. What do you think about Opera's quarter and our trade idea? Let us know. Until next time, keep digging deep.